Hey guys, welcome back to the channel. In today's video, we're going to be discussing what happened with GEVO today. We're going to talk a little bit about public offerings as well as share dilution, and then we'll look at the charts really quick just to kind of see where we think it might be heading moving forward. Just to reiterate, I'm not a financial advisor. I'm not recommending that you buy this stock. Also, if you find any value in today's video, please hit the like button. Also, if you do enjoy our content, please feel free to subscribe to the channel and also hit the notification bell. That way YouTube can notify you every time we do release new content. So MarketWatch released this article this morning. It says GEVO shares slide 20% pre-market on the news of $350 million stock offering. So stock offering, guys, is basically just for a way for a company to raise money, raise capital for all different types of areas of their business. So if a company needs to expand in a certain area of their business or if they just need working capital, then they can offer new shares to the public, and which is a good thing for new investors because if they've been wanting to get into the company at a lower price, typically whenever these companies do offer more shares, we see a dip in the price, so it creates a good buying opportunity for these new investors. The bad thing about um, this for current investors is it actually dilutes their shares, meaning it basically makes their percentage of ownership smaller. So, for example, if there were a company that had 1 million shares to offer and there were 10 people that went and invested in that company, and let's say they equally bought 100,000, they each had 100,000 shares, so they own 10% of the company. Well, that company eventually decides they want to raise more money and they decide to issue another million shares. So now you have two million shares total, but it's 1 million that's outstanding. So basically, it diluted the current shareholders percentage from 10 down to 5. So it's like a 50% dilution, and that would obviously rub some investors the wrong way and you know cause a drop in the price. So like I said, though, it creates a possibly good buying opportunity for new investors. So let me just read this article that MarketWatch did release today, and then we'll hop into the charts and go over what you might see going into tomorrow. So it says shares of renewable energy company GEVO slid 20% in pre-market trade Wednesday after the company said it's selling $350 million of its shares in registered direct offering priced at the market. The company is offering 43.75 million shares priced at a discount of $8 each. The stock closed Tuesday at $11.03. H.C. Wainwright is acting as placement agent on the deal. Proceeds will be used to fund capital projects, for working capital, and for general corporate purposes. Inglewood, Colorado-based GEVO shares have gained 404% in the past 12 months, while the S&P 500 has gained 14%. So it says it there, guys. The proceeds will be used to fund capital projects, for working capital, and for general corporate purposes. So there you go. So that's why they decided to issue more shares, as they wanted money for those particular reasons. So a lot of these companies do this. I mean, Tesla does it. I know they've done it in the past. For the most part, like I said, usually whenever they do have an offering on these companies, you'll see a dip in the price. It's very rare, I think, that you'll actually see it go up. So which is why you saw it dip down that much, at least today. So let's go ahead and look at the charts and see what it's telling us moving forward. Okay, guys, so if you check this chart out, it doesn't really look much different than it did yesterday, so I'm not going to spend a whole lot of time on it. But like I did tell you yesterday that we did expect a pullback just because of the significant run-up that we had up to $11.68. And then with the public offering news, you see it drop down. It broke below that key support level of 903, got all the way down to 813 at one point, or actually 810. Did make a little bit run back up, trying to bust through that resistance level. So now your 903 now acts as a resistance as opposed to support, and your support would be at about 739. So you do have a buy signal here on the 4 hour, but I would be cautious. That can change. Just because you have a green arrow telling you to buy, doesn't mean that it's going to, continue and bust through there. So you want to make sure that you get a good candle close above that green EMA line here. So a good sign would be if you have another candle that pops up above here and breaks through that 903 mark and holds there. So something to keep in mind. Like I said yesterday, we are, close to overvalued. We were in overvalued territory yesterday, and I did mention that we may see a slight pullback and then a run back up. Wasn't expecting the public offering to drop it down 20%, but um, if I were getting in, I would like to see it more, in the middle here or lower down. So I would just keep an eye on it if you haven't gotten in yet. Just kind of feel it out. It may, continue to dip down, and you might be able to get it at a better price, but not 100% sure. So just be patient with it if you are looking to get in. But other than that, I just wanted to provide some insight, kind of what happened today, and talk about public offerings and share dilution, just to provide some insight on that. So anyway, guys, that's all I have for today's video. Again, if you found any value in today's video and you like our content, please hit the like button, subscribe to the channel. Other than that, we'll catch you next time.